All right. Wow. What a week. So on Friday, last Friday, we had the drop. On Monday, an attempt to recovery. And over the last 2 days, stocks tried to recover. At first, it looks good, but then they're being pulled back. So today, we had the jobless claims, the weekly jobless claims. Usually a report that doesn't move the markets, but today it does. So also, what's happening with the Fed right now? Will the Fed actually raise interest rates by 50 basis points or just 25? Will they call an emergency meeting? Well, all of this is what we're going to talk about in today's show. With that said, welcome to Coffee with Markus and Morgan. Today is Thursday, August 8th. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And Mark, I first want to go to the heat map because, wow, this looks almost like every morning, and then this rally fizzles. I mean, let's take a look here and see what's happening. Right? Let's actually go to a 5 minute chart of the S&P 500 because I think it's a little bit easier to see what has been happening here this week on a 5 minute chart.
Yeah, I would agree. And so Monday, after that huge drop in the lower open, we saw the market rallying for half of the day and then pulling back into the close. On Tuesday, there was a little more momentum to the upside, a rally for most of the day, and then a pullback into the close. Yesterday, we gap higher. We see a little upside, go sideways, and then we start to tumble during lunch. And it didn't get any better after that, where we sold off and we ended the day negative, trading at the lows of the session as we wrapped up the day. Today we got higher, and so far we're staying higher.
Yeah, but let's talk about it of what's happening here in the markets, and we we briefly already explained it, right? So there's several factors that have been weighing on the market in the last few days. Number one, we have the so-called rotation going on, where I mean people moved out of the big tech stocks and saying, well, maybe the AI boom is over right now, and started to go into small and mid cap stocks. So we had that. Then, number two, we had the jobs report last Friday, which came in much worse than expected. And this is where we saw the sell off on Friday. Then we also had the Bank of Japan raising interest rates, which made the yen skyrocket. And we suddenly heard something about a carry trade that we haven't heard about before, but this suddenly came into focus. And then number four, we still have earnings going on. We're winding down earnings season, but we also right now traders and investors want to see, okay, is the economy slowing or not? Because the big R word is back. Recession. Are we going into a recession or not? So these are all of the factors. Now, the Bank of Japan said already, I think it was yesterday or Monday, okay, we're no longer raising interest rates. Okay, so hopefully that's off the table. Earnings really winding down. This might be off the table. The rotation, I think it's more of a minor factor. So right now, I think traders' focus is all on jobs report and, of course, the economy to see, will we really go into a recession? Has the Fed overdone it, or are we good? So what's happening?
Well, Marcus, I think it was a great explanation here. And although there could be some tailwinds on because of everything else that you've scratched off, the focus is on jobs, and proof today when we have a spike after this morning's weekly jobless claim. So an hour before U.S. markets opened, we had the weekly unemployment report, and these numbers were better than expected, lower than last week, and also lower than analysts forecasted.
Right, and this when we look at the E-mini S&P and a 5 minute chart. Let's just go there for a moment. We see that I mean in overnight trading we did kind of okay. As you can see, we're diddling along yesterday evening when the markets opened again. At first, we were pushing lower, slightly higher during the Asian session, slightly lower during the European session, and then we suddenly see this spike. And this is where traders are looking towards. The weekly jobless claims like, hey, they came in better than expected. So does this mean now we can cross off the factor jobs report?
I mean, the monthly report is a big one. It's always been a big one, but it's also a little bit delayed, right? And I mean, even there were adjustments made to previous reports last Friday. Although the weekly claims are typically just a small blip on the radar, it does seem as though investors are looking for more short-term data and short-term changes, and that today was a catalyst for this move higher.
Yeah. Well, we also see that the VIX, the fear index, is staying at elevated levels because there is still a question mark about the recession. Are we going into a recession or not? Because last week we had people shout emergency rate cut, and last week, if you look at the Fed funds futures here, we actually had a probability of 92% for a 50 basis point cut. This has kind of normalized. I mean, now we're at a 50-50 chance. I mean, a 100% chance that the Fed will cut rates at the next meeting, but it's coming back to normal.
Yeah, I mean, markets were definitely spooked heading into the open on Monday. There's no doubt about that. Otherwise, the VIX wouldn't have been at the highest levels that we've seen since the pandemic. Just the craziness in March of 2020, or like you shared yesterday, 2008, and the financial crisis. But you know, it it does seem like there were a lot of warnings that were put out there. People were talking about the Fed having an emergency meeting and cutting rates by 50% this week, meeting on Monday, meeting on Tuesday. Something had to be done, and now investors are saying, okay, maybe that was a bit of an overreaction.
Yeah, it definitely seems this way. So, I mean, again, some good news from the jobs report, but I do believe that we really have to wait until next week when we have more important data coming in. And we already see nothing on Monday. Oops, that's not where I wanted to go. I wanted to go back there. And then on Tuesday, we have the PPI and core PPI. On Wednesday, CPI, core CPI. And then I think the retail sales is the big one. And until then, it's all a big question mark. And I mean, this is where we see markets are still nervous. The VIX is still elevated, the fear index, and markets are trying to rebound and then maybe not. And then let's try again and maybe not. Let's try again, maybe not. So we'll see if today this rally that we see so far is sustainable, because right now we're doing good. I mean, the S&P is trading at session highs, but that's, as we can see on the 5-minute chart over the last few days, it was always around this time when we were trading right at session highs, and then we started sliding.
Yeah, so there could be some strength if we stay at these levels, or rally into the close rather than pull back, and that remains to be seen, at least for today.
Yeah. Let's take a look at our positions and see what's happening. First of all, on the WTF, we had a new entry signal. And today it was in Oracle. Let me just bring up Oracle here. So this is an entry signal, and we both liked it.
Yes, yes. So with WTF trades this week, uh, they've worked out great, and this is one that popped up on the list with the allocation that I have made to the strategy. I had some open buying power. I took it, and so far working out.
Yeah, filled at 128.34 and right now trading at 129. And then we also have a bunch of open ones. We have no exits, but we do have a bunch of open ones. And first up here on the alphabet, AXP, American Express, doing good. We entered at 226 and right now trading at 233, up 2.2% for the day. COF also trading above our entry price. Our entry price at 131.94, so around 132. Right now trading at 134, up 1.4% for the day. EMR, my gosh, what a comeback today.
Yeah, this was a little unfortunate because it was looking so good before earnings, and then yesterday there was that earnings drop. But I picked up more shares at 101.48 with that pullback there, and a nice rally today, up 4.3%.
Absolutely. So this works out great. GM, another one rallying today, up 3.5%. This is also where we added as it was dropping. So this is a nicely profitable trade so far, even though it's slightly trading below our entry price, but we have been able to add to this position. Google,
Yeah,
Mark. Sorry?
I was just gonna say with the ad, it turned into a really nice trade. Nice winner there.
Very nice one. Google, our next one on the list.
Yeah, hanging in there, rallying, a little continuation, and that's what we like to see.
Yeah, and then Honeywell, a little bit all over the place yesterday. I mean, huge swings that we saw yesterday. I mean, we were trading as high as 204 and as low as 197.70. Today, up a percent, and we'll see. Trading below our entry price right now, and Honeywell, really interesting. I mean, not following the overall market at all, just doing its own thing.
It is interesting to see, it because it's just kind of chopping around. For me, that's the only losing WTF I have right now. Actually, EMR is a small loss,
Right.
based on the 5% ad, but Honeywell the only loss on WTFs right now for me.
Well, when you say loss, we haven't closed it yet, so it's just a position that's in the red right now, but we can't count it as
Losing
a
as we speak.
pardon. Yep. All right. MET also nicely up today. We entered at 68.91. Right now trading a little bit less than $1 above our entry, and then still, I think it could be the trade of the year. TTD, the trade desk, up 2.5% today.
Yeah,
Way up. Yeah.
loving this. I got filled at 77.32. It's trading around $87 right now. So nice couple of days, and we might have an exit at the open.
Yeah, and so far up more than 12%. A wonderful, beautiful trade. All right. Hopping over to the wheel. First up, CSIQ. Looking at this yesterday, being down, how much were we down yesterday? 4%. Today, moving higher, 4%. So we'll see where we end. It seems that we are right now trading around the closing price of Tuesday, and right now trading at 14. Let's go, little buddy here. Nothing for us to do with air. And then we have HAL, Halliburton, up around 0.7% today. A little bit all over the place. So not able to sell calls here right now. Need to wait until this pushes a little bit higher. Now, while we are on oil and gas, let's talk about the BP trade that you took last week, where you sold the 34.50 put.
Yeah, so this one's going to be interesting. Last week, I was able to get 32 cents for that 34.50 expiring tomorrow. And then Monday, we open lower. We're moving higher today, but this does go ex dividend tomorrow, which doesn't really matter. I knew that when I put the trade on. Typically, you'll see the stock drop by the ex dividend amount, and we'll just have to see where this ends up. But it looks like I'm likely to get assigned shares, and then hoping to sell calls on Monday.
Yep. KSS, that is a position that I'm in. You skip this one. So this is where I sold puts, got assigned at 21.50. Right now, trading at 2014. I'm trying to sell calls against half of my position at 21.50 right now, calls that are expiring next week. And I'm looking to get 25 cents here. And right now, it's trading at 19 by 21 cents. So still needs to push a little bit higher here, but that's my plan for today, to be able to sell calls.
It's
Merck.
good.
Yep. Merck.
It's
I
good.
mean, yesterday having a good day. Merck up 1%. Today up another 0.5%. So we'll see. My break even at 116. My cost basis at 120, waiting to be able to sell calls, nothing just yet. Broadcom, AVGO, this is a trade that you had on. And yesterday, at first it rallied and then pulled massively back. Today, up another 4.5%. Talk about this trade.
Yeah, so this was one I put on last week when things started to get a little crazy in the market, and I was able to sell the 125 put 10% below where the stock was trading at the time. Yesterday, I was able to close that put for 5 cents, which locked in a 94% profit on those puts sold. So not in this anymore and seeing what happens.
All right, so you have another position free. And then we also have UPS, and UPS having a better day today than yesterday. So yesterday down 1%, today up 1.5%. Found some support at 123, and now really still needs to break out of this range that it has been in between 123 and I want to say around 132, somewhere around there. And trying to do the gap fill. Come on, UPS, you can do it.
Come on, UPS.
Come on, UPS. All right. So yeah, these are all of our positions that we have right now. So let's see if the markets are still staying up or if right now they are turning down. And before we do this, it is the time in the show for a dad joke. Mark, what do you got for us today?
Do you know anybody that lives in North Korea, Marcus?
No, I don't.
So I have a friend who lives in North Korea, and I asked him what it's like to live in North Korea. He said he can't complain.
All right. Now, I have a visual for you today. You know how sometimes we envision as we get older what we will look like in 10 years from now or 15 years from now? Well, this is how I see myself in the future, except with a different color shirt because I don't like brown.
Well, Marcus, on my end, okay, there you go. Yeah, manifesting.
I just don't like the brown shirt, so yeah.
There you go.
All right, let's go back to the markets. Let's take a look at a 5-minute chart of the S&P 500, and we will see. So far, we are already. Look at this. I mean, no, stop. Keep moving higher. Stop right there. We see the exact same pattern that we have seen over the last few days. Getting excited in the morning and then sobering up and going into the lunch break in the afternoon, moving lower. So let's just forget about this. So let's just keep pushing higher here. Let's see if this recovery has some legs or if we see this volatility continue to go on until we get some more data from the economy next week that might give us a much better idea whether we are going into a recession or not.
Yeah, that I think is what we need to see before this rally really continues. But decent volume today, decent volume on this rally. So we'll see where we go after lunch.
Well, with these crazy markets, you definitely don't want to miss the next show. So we'll be back tomorrow. Make sure that you tune in. Also, let us know which of our jokes did you like better. So after the show ends here, you can leave a comment below. Hope that you enjoyed this. If so, give us a like. We appreciate all of the likes. And if you're new to the channel, hit subscribe because we'll be back tomorrow to see where we wrap up this week. And this will be interesting because right now in the S&P, we are still down 1% for the week, but this week, this is nothing. We might end the week positive. So never a dull moment in the market. Right, Mark?
Absolutely. Absolutely.
Okay. With that said, have a great rest of the day, and we'll see you tomorrow.
Happy trading, everybody.